get confused when you can't like you're looking at the consolidation, and then you're trying to figure out, is it the first when you first start off, right? Okay. When you're doing it right, you got the consolidation, right? That's what you want to see. Okay, why? Because during the consolidation, let's do some notes for the note takers, right? During the consolidation, right? Open this up. Come here. There you go. Put this over here. Oh no, it's just too far. Put this right here. Right. So during the consolidation, right, we are engineering. I know I spelled that wrong. All right, we are engineering liquidity. Right. We engineering liquidity during the consolidation. Okay, so if this is engineering liquidity, right, what are they engineering liquidity for? So that the big boys can make their move. Okay, so price moves, and we haven't covered this yet, but price moves in two different ways, right? It's gonna consolidate, expand, retrace, and deliver, right? So it's gonna consolidate, right? Expand up or down, retrace, and then deliver, right? Or it's gonna consolidate, expand, reverse, retrace, and deliver, right? Get off my thing. Come here, right? So these are the only two ways price move. Okay, so when you're consolidating right here, you're engineering liquidity. What are you engineering the liquidity for? You're engineering liquidity so that smart money can make its move. When does smart money show you that it's making a move? Right? When you get heavy displacement. So when you get heavy displacement, that's when, right? Okay, so when you get the heavy displacement, right? Heavy displacement, right? When you get the heavy displacement, that's when you know there's institutional sponsorship. Right? And what does institutional sponsorship look like? It look like large moves, because it takes big money to move the market for an extended period of time. And then what do we look for with what do we look for clues for the institutional sponsorship, right? Remember, we look for short-term liquidity, right? We look for short-term liquidity in the market that it can be going to. We look for imbalances. We look for all this stuff we're looking for, right? So you have the consolidation here, and then we get a huge move down like this right here. So now price is only going to move. Let's flip this. So let's flip this so that we're looking at a bearish example. Right. So I made both of them bearish examples, right? So if the market is bearish, then you see a move like this here. Now you're looking for the clues that the institutional sponsorship left to keep price down. You see what I'm saying? If you like, just say if you don't know what the draw is, right? If you don't know what the draw is, you see the consolidation and you see the big move down. So now you start looking for, okay, we're moving. Now you also want it to move back into the range. So you're looking for like the initial consolidation, you're looking for the displacement, you're looking for the liquidity that can be attacked. You know what I'm saying? Like we came down and we took this sell side right here. Okay. We came down and we took this sell side right here on this move. Okay. Right. We came and took that sell side. Now, if price is to continue to be bearish, now all this is happening at an anticipatory reactionary point, right? Because we anticipated price to come above that buy side. What was above that buy side? We had a 4-hour fair value gap. Then we had this daily fair value gap right here. I mean, that's at 1 hour. The daily is down here. This is the daily fair value gap here, where, you know, we was anticipating if price is bearish, we want to see this become an inversion fair value gap on the daily, right? So you got all of these draws below price. You got sell side there, you got sell side there, you got a daily imbalance down there you're anticipating price to go to. So you got liquidity below the market that you anticipate price going to. That's one of the things with the institutional sponsorship, everything that we talked about, right? And then now that you see the move, you see the big move, now you want to see an institutional sponsorship protect this move down, right? And how does it protect that move down? By respecting the clues that it left behind, right? So if we look here, if we look at this overall move right here, we're just looking at this overall move, not saying this is like the move, but looking at this overall move here, this imbalance is right there at equilibrium and it goes into a slight premium, right? That imbalance right here is at equilibrium and it goes into a slight premium. So this right here can realistically continue to push price down for the overall move. We also have a imbalance up here, right here at this order block that's right there at midnight. So price could very well push all the way back up to there if it really wanted to, right? But if it's exceedingly bearish, you don't want to see it come up past this, right? Because this is right there at yesterday's low. This is at a low. You got an order block here at a low, at an imbalance. So you want to see institutional sponsorship protect the move and continue to push price down. You know what I'm saying? So the institutional sponsorship is not just, it's not just a candle, it's not just a move, it's a whole idea, it's a whole narrative, should I say. The institutional sponsorship is an entire narrative. Did I lose you? I see you blinking, but I can't hear you. Say that again.
I got my Discord be messing up. I was saying I understood what you were saying.
Okay, yeah, I heard you that time. I think it might be your cell phone. You might need to get closer to it.
What? No, I'm actually on my iPad. It just be tripping.
Well, your iPad. I know my brother iPhone, like when he be on speaker sometime, like he got, if he like we be on FaceTime, if he be far away from the phone, it don't be picking him up. And he got to get, when he get closer, then it be picking him up, like it be cutting his voice off.
Right.
Yeah. See, I can hear you fine right now. But before, yeah, I can hear you trying to talk, but it was like, it'd be like clipping. It'd be like it'd be like clipping you off. You know what I'm saying? Like you be too far away.
I turned my headphones off. It was my headphones.
Oh, well, you got the cheap headphones, man. You got to get the real deal, man. You can't be tell Josh to get you some real headphones, man. Hey, so
okay,
go ahead.
We really don't want to see it go back up to that first fair value gap because that's in a premium.
No, it'll be fine for it to go there. You know what I'm saying? Okay. But if it's like exceedingly bearish, meaning you like price wants to move fast, then you don't want to see it come back up here. Since this imbalance is at equilibrium and in a slight premium, and we got this up close candle right here, it's like you want price to just keep sliding. You see what I'm saying? Because, and let me go up right here. So see, we came up to this 4-hour imbalance right here. Okay, let's zoom out so we can see, right? So price, I'm just gonna zoom it in like this right here. See, price had been melting down, right? We came down and we took out all this sell side over here, right? And then we started pushing back up. This is down here in the monthly fair value gap that we was watching. So we're in here soaking up liquidity inside this monthly fair value gap right there. And then on the monthly candle, while we was in there soaking up liquidity, right, we closed below equilibrium on, well, not equilibrium, but consequent encroachment. We closed below consequent encroachment of the monthly fair value gap, right? And why is my fair value gap off? Okay. I'm glad I looked at that. Got my fair value gap off. Okay. So we closed below consequent encroachment of the fair value gap, right, on the monthly. And then on the weekly, right, so on the weekly, we had a small weekly fair value gap there. And then we had this weekly order block here, right? And so we were watching that weekly order block. We're just going to highlight this candle here because it encompasses both candles, right? So that's that entire weekly order block right there. That's the mean threshold of that. You can allow for it to get up to there if it want to. And then if you for those who don't like using wicks, they only like to use the bodies, right? That's the mean threshold, only using the bodies, right? So you can allow up to there, right? You can allow up to there. And then when we go down to the day, oh yeah, and then the weekly had got a bearish breaking market structure right there too. So we got the bearish breaking market structure. Then we were moving back to the internal range, inside the range, right? So the dealing range was from this high to that low. We took sell side there and we took buy side as we went up, right? So we're back. We came back to a premium on the dealing range for the weekly, right? And the weekly had broke bearish, came back to a premium. What do we have in the premium? We got an order block and we had a small imbalance. I'm on, yeah, somewhere around in here where I can't even see it right now. Oh, right there. Yeah, that was it right there, I think. Yes, that's it right there. Small imbalance right there at the equilibrium of the dealing range. Okay. Then on the daily, right, the daily had broken bearish, right? It had broken bearish there. And then now we've moved back into the premium. We are here. We're right there at a daily order block. We right there. We got a daily bearish breaker right here. If we look at our bearish breaker over there on the daily, we're right there at mean threshold of that daily bearish breaker. We near the mean threshold of the weekly order block, right? And then we got all kind of stuff going on right here, right? So we got a lot of stuff that we've retraced back to in the premium. Okay, so now since price was bearish and we were coming back into a premium, that's why I was like, I'm anticipating this to become an inversion fair value gap. But if this holds price, remember when I was talking about if we come down, remember when I was talking about, I said if we come down and respect this and then create another imbalance up in here, right, then this would invalidate my bearishness. You see what I'm saying? Because if we come here, respect this, this would be showing that the institutional sponsorship is bullish. You know what I'm saying? This will be showing, doing this right here, creating an imbalance, going back up like this, continue to take out the high. It would show that this bearishness for now is done on the daily time frame. You see what I'm saying? But since the weekly has switched bearish, that's why I'm still leaning to the bearish side, because we're moving into the bearish seasonality. You see what I'm saying? But we got to wait for all this to play out. Now, remember when I said price moves in two different ways, right? We consolidate, right? We expand, we reverse, we retrace, and we deliver. See what I'm saying? So if the bearishness is to continue as I expect, then this would be our consolidation, right? This would be our expansion. And then if we come down and give us an inversion fair value gap, that would be our reverse. That would be our retrace, and then our deliver. Right. So the institutional sponsorship is a whole thought process. It's not just oh, I see displacement. That's institutional sponsorship. Oh, I see no, it's a whole thought process behind it. You know what I'm saying? You got to understand the whole narrative. And once you understand the whole narrative, you watch for the clues that price is leaving you. We tracking? We good? We good? We tracking?
Yes, sir. Thank you.
All right. Now, that teachable moment was brought to you by Tish. Good morning. Good morning. Good morning, everybody. I'd like to welcome you to another episode of Le Overnight Price Action Review. Oh, wait a minute. I forgot to get my picture. Hold on. Let me get my picture. I ain't pop my picture up. Picture pages, time to get your pick. I'd like to welcome you to another episode of the Overnight Price Action Review. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Grande. For all my non-Spanish speaking compadres, that's Big Spider. You hear me? And like I said, this is the Overnight Price Action, and we are going to get right into it. Since I spent a whole lot of time talking about institutional sponsorship, Here to Learn and Share said, thank you, Tish, for the teachable moment. Speaking of Here to Learn and Share, good morning to you. The birds are chirping. Good morning, Valdez. Good morning, Medi. That's how I'm going to say it. Good morning, Lumpford. Good morning, Sanjay. And good morning to the rest of you, everyone that's tuning in. For the gang and the non-gang. We're going to get into the overnight price section. Let's go down. Let's get off this daily chart. Let's go down to 15 minutes so we can get a little detailed. Okay, so on the 15-minute chart, the 15-minute chart, hold on. All right, get out of my way. All right, so on the 15-minute chart, I got my line there so I know where 6 p.m. is. Yes, that's 6 p.m. there. So we did a whole bunch of nothing all night. I'm glad Tish gave us the teachable moment because we did a whole bunch of nothing all night. We just basically consolidated all the way up until 6:45 this morning. We did do a little something here. We had a midnight open at 52.12.50. Continued the consolidation into the London Open. At the London Open, we moved up and took out the short-term buy side here. This will be the short-term buy side that I'm referencing. All of this, if I get my line, this right here would be the short-term buy side that I'm referencing right there. So from 8, that's the high at 8 o'clock. So we took out the Asian, the prior session buy side, right? So we took out the prior session buy side during the London, and then we consolidated again, and then we displaced away like after the London kill zone was over, really. So prices, and then we dropped all the way down until taking out that sell side here on at 8:30. That was some sell side that we took out right there. So that's pretty much all we did all night. So again, we just consolidated, going into the Asian, going into the London. During the London, we took out the Asian high, right? Came down. We created we dropped down here. We created this SIBI there. Moved back up, respected that SIBI. This 15-minute candles respected that SIBI. We created a SIBI at 345 after taking out the Asian buy side, right? Dropped down below the midnight open, right? Wick back up and filled the SIBI, poked above the buy side one more time, did something on a lower time frame. I'm not going to drop down to see what it was, but we respected the SIBI, right? Next candle open up, we dropped down and created an inversion fair value gap right here on this 3 a.m. candle. Created the inversion fair value gap there. Came down below that sell side once more. Had respect for this 430 SIBI, the one that inverted this fair value gap for a little while, but then we moved back into the inversion fair value gap, looking like we're respecting the consequent encroachment, and we were respecting the consequent encroachment of the inversion fair value gap while we was continue to engineer liquidity here, consolidation / engineering liquidity. And then we had the displacement away here on the 645 candle, and we dropped all the way until the 830 candle. And now we are currently moving back into the range, right? And if we go from the drop, right, we have just broken to a premium. And if we go for the entire dealing range, again, we have just broken to a premium for the entire dealing range, coming into this potential order block and this SIBI here. Right. So again, and let's look at this. Follow my OTE people. I haven't taught OTE in a while. It helps if I flip it the right way. Look at it in reference to an OTE. A 62% retracement will put us right at this lower. I mean, this this lower. You got two imbalances here in the premium. 62% retracement will put us right there at that lower imbalance there. Let's look at it on the hourly time frame. Okay, we got 2 hourly fair value gaps there. So on the hourly time frame, we have an hourly imbalance there, another hourly imbalance there. So with this hourly imbalance there, I give that precedence over what the 15-minute is doing. All right. So I give that precedence over what the 15-minute is doing. Right. So I would like to see respect. If this bearishness is to continue, I would like to see respect for this fair value gap here. Trade up into it. Even like I like to see an institutional order flow entry drill where we respect 25% of it, 25 to 50% of it. Let's put it in the 4th grade. All right. So 25% of it is 5205.75. Right. And then just treat this as a breakaway gap. Right. Don't even touch it. Don't even try to get to it. That's what, since we got this institutional sponsorship here, right? Respect this and drop. Don't even try to get back to that because of like how the move is, the way it's showing. The way it's showing, like the way the algorithm is showing that it wants to move, right? Looking at the hourly chart here, we came up, respect, consequent encroachment, all this time, poked above the buy side, dropped down, came back, respect the SIBI here, continued to respect the SIBI throughout, took out the Asian buy side, continued to respect the SIBI, and then dropped, right? Now that we've dropped this right here, I want to see it hit this, respect that, and drop back down, right? Even though you can, even if we were to trade, now don't, this is one thing that a lot of people get confused when you talk about breakaway gaps. They think that, oh, you don't have to touch it at all. A breakaway gap is just a gap that doesn't get filled. So we can realistically come all the way up into this gap and still drop. You see what I'm saying? And that would still make it a breakaway gap. Like if we came here and got an institutional order flow entry drill on this where we just poked into it and then went back out, that would still make that a breakaway gap. So whenever you got imbalances above you or below you, you have to allow for price to go back to it. You know what I'm saying? You got to allow for price to go back to it. Yeah. And also don't forget that price moves in two ways. So if the algo wants to fill this, right? If it wants to fill that right there, what do we have here? See? You always want to understand both sides of the story. You know what I'm saying? You always want to understand both sides of the story. So price is showing bearishness, right? So we stick with the bearishness until we're proven wrong, right? What proves the bearishness wrong in this case? If we come back up and take out that high, right? If we come back up and take out that high, that makes this move here a Judas swing, right? Come, drop. If we come take out that high, that makes that move a Judas swing. And a Judas swings means, okay, I'm going to come back into the range and go up in this case because we're going down, Judas swing. I'm going to come back into the range and go up. Okay, so this again, this is just talk about how to see stuff in real time. When people like, I can't see it in real time. This is how you see it in real time. You anticipate things, right? So we see what price is doing now. We see price has consolidated. And we see price has came down, taking out the sell side, and we're moving back into the range, right? So we're anticipating bearishness. We're looking for price to go back down, right? Okay, that's what we're looking for. What invalidates this, right? If we take out this high, right there, we come take out that high, now that makes this move a Judas swing, right? So you would anticipate price to come back into the range and then go up, right? Now, if price drops all the way down here, takes out this sell side, shoots all the way back up there, takes out this buy side, and then comes back down again, taking out sales, that's manipulation. The algorithm don't work like that. You know what I'm saying? The algorithm don't work like that. That's manipulation. That's not how the algorithm works. It's not going to just continue to like take buy side, take sell side, take buy side, take sell side, take buy. No, it's going to seek liquidity, then seek imbalance, seek liquidity, then seek imbalance, seek liquidity, then seek imbalance. It's not going to just keep taking out liquidity on both sides randomly. It has a purpose. It has a thing it has to get to. You know what I'm saying? For example, if this is a market maker sale model, right? It has a destination. Right there, that's the destination. So you come up here and like it's showing you all the clues, right? We got consolidation over here, we go up, we reverse, we got consolidation over here, we go down. You see what I'm saying? And we push back up into the range, we go down, you know, maybe consolidate or something a little bit over here, opposite of this, push back into the range, we go down until we get to the initial consolidation. That's how price moves. Price don't just keep going, you know what I'm saying, from sell side to buy side to sell side to buy side to sales. That's manipulation. And again, this teachable moment has been brought to you by Tish for bringing up the discussion of the displacement and the institutional order flow. Remember, institutional order flow is a narrative, not just I see displacement. We got institutional order flow. No. What do we talk about in the? Let me go back to the I'm running my mouth now. I can't help it. I'm about to get off in a second because it's 10:05, but I can't help it right now. I'm in my bag. I'm all the way in my bag. Hey, why isn't this opening? What's going on with my computer, man? Hey, PowerPoint, what are you doing? What? It's locked up. What in the world? Can y'all still see me? What just happened? What in the world just happened? Can y'all still see? Yeah, y'all can see me. Okay. All right. Okay. I don't know what just happened. I don't know what just happened. Pang out! Institutional sponsorship, right? Higher time frame. Get out my way. Come here. There y'all go. Yes, y'all can see. Let me move me out the way, just in case. What's up, 100? What's going on? What's happening, man? Hey, institutional sponsorship, right? Higher time frame displacement, right? You look, this is the stuff, this is all the stuff you're looking for, right? Reversals, expansions, returns to fair value. You want to see higher time frame displacement in these forms right here. You want to see big money move in the market in the form of reversals, expansions, returns to fair value, right? Intermediate term imbalance in price, move to a discount, sell side running. You know what I'm saying? This is for the what's now. You want to see it move. Short-term buy side liquidity above the market. Let's look at the bear side because we was talking about price was bearish, right? Same thing. Move to a premium or buy side liquidity, buy side runs. Short-term sell side below the market, ideal for pairing short extras from to buy from, right? Time of day influence. London open high today, New York high formation. This the stuff you're looking at for time of day influence. Is all this, the institutional sponsorship is a whole narrative, right? It's a whole narrative. Okay. So with all of that said, it's like you're looking for all of that type of stuff when you're looking at an institutional sponsorship. Okay. So let's talk about higher time frame displacement in the form of reversals, expansions, or return to fair value, right? So we're looking here at like an hourly chart right here. We're looking at an hourly chart here. This is a 4-hour chart there, right? Looking at a 4-hour chart here. See how we see how we move down this 4-hour candle here. We're moving back down. Where are we moving back down to? We're moving back down into the range. We're expanding back down into the range. What's all that? Like we're expanding. We're returning to fair value. It's, you know what I'm saying? This is all the stuff that you be looking for, stuff like that when price starts to move, right? So price is moving, price is showing you that it wants to move, right? We got displacement. Here's our on the hourly time frame. We got displacement here, right? And before we displaced down, we came above here and took out short-term buy side, right? What did we say we were doing right over here? We said we were engineering liquidity right there, right? We're engineering liquidity here, right? So time of day influence at 3 o'clock. This is the London. right? This actually is the London Open, actually, in this case. So right here at the London, we move above and take out this buy side, right? We move above and take out this buy side, and then we displace down, right? What do we have to displace down toward? This sell side right here, right? So we displaced down, we took this sell side right there, right? We took out the sell side, and now we're moving back up into the range. And now we're looking for the institutional sponsorship to want to protect the move, right? You look for institutional sponsorship to protect the move. Let me see here. Got the higher time frame displacement right there, and then here price here came back to an order block, right? It came back. This order block protected the sell stops up under for this move, right? Price displaced away, right? And we came back down, and it protected these sell stops. And now when it comes back into the range, what's left in the market? The short term, the intermediate, the buy side liquidity there. So over here, when price displaced away, right, and we're moving back into the range, right, we got all this stuff right here. We got imbalance, order block that's supposed to protect these buy stops right here. And then what's left in the market? We have below price in the market. We have sell stops, sell side liquidity in the market, right? So the whole, you know what I'm saying? Just like this one here, when you come back into the range, in this case, this order block is protecting this institutional move, right? This is to protect it, to stop it from going lower than here. And when you come here, now, once you're here, what's left in the market? Buy stops to pair with, right? And we get the move buy stops to pair with, right? And then you got more stops further up. So now, in this case here, when we move back into the range, right? What do we have down here? We got sell stops to pair with. This stuff here is to protect, right? Let's see. These PD arrays here. Right. So all these PD arrays there are designed to protect this buy side liquidity right here, right there. So they are there to protect that. And this is all part of the institutional sponsorship. If this bearishness that the market is showing us right here is to continue, this stuff right here is designed to protect these buy stops based off of we had consolidation, right? We took out short-term buy side and displaced away. Now we're moving back into the range, and we got sell side in the market below price that we can deliver to. That's the whole idea of how institutional sponsorship works. That's the whole idea of how the market moves, period. Y'all just got everything y'all need to know when it comes to trade and ICT concepts all in this one video. You're welcome. And with that, that brings me to the end. What G said, turn on regular trading hours, market trade to closing candles, ICT, PD arrays. Turn on regular trading hours, market trade to closing candles, and ICT, PD array. Yeah, they use We talked about that one time before with the regular trading hours. Like it treats the regular trading hours just like the overnight stuff didn't happen. They don't do it all the time, but I appreciate that 100. I appreciate that 100. Hey, that's it, man. That's all I got. Anybody got anything for me before I go? Shout out Lil Hawk. I see Lil Hawk in the Discord. See if anybody else pulled up while I was talking that I didn't shout out. I don't see nobody else in the chat I didn't shout out. I think I shout out Valentine. If I didn't shout out Valentine, what's up, Valentine? Yeah. Yeah, I think that's it, man. All right, man. That's it. This has been another episode of Late Overnight Price Action. Till the next time to decide to get on. Oh, you got a new dog. What's up? You got to send me a picture. Send me a picture of your new dog. Till the next time I decide to get on Algo's internet and share my thoughts on this thing we call price action. Y'all be safe out here in these trade streets, man. It's your boy, Aranya Grande, a.k.a. Big Spider. You hear me? I'm gone, man.